Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While many of you in Mumbai may have faced the troubles that come along with the pouring rain, it seems the pouring of Chinese stimulus measures have grabbed the limelight, and it seems nowhere to have subsided. The latest announcement indicating that the China will give a one-off cash handout to people in extreme poverty before next Tuesday. One thing that has kept investors jittery is also the war in Lebanon, which are showing signs of escalation. For the AI followers, Sam Altman, the CEO of OpenAI, has proposed construction of multiple 5 gigawatt data centers. To put that into context, 5 gigawatts is roughly equivalent of 5 nuclear reactors or enough to power almost 3 million homes. Good morning, JK. A lot of ongoing developments with China, geopolitics, and of course the upcoming PCE numbers from the US tomorrow. How are you reading the sentiment?
Hey, good morning, Swaraj. I think every day when we get up, what we are now looking at is what China is doing next. And as you said, they've been continuing to announce new measures every day. And it's an unprecedented bazooka of stimulus which China is doing. Uh, it is a reflation approach that they are doing because their inflation is low and they can afford to do it. Also, there are some indications that they will even loosen their fiscal deficit to accommodate more largesse to the economy. Now, whatever done so far is towards consumption and stock market, and they have responded well, particularly in the stock market. But the biggest problem is housing, and we need to wait and see whether there are effective measures to lift the stock market and the house prices, and that will be the final thing that the market is looking forward to, as well as the commodities which are looking like bottoming but still not in a bullish trend. We also have a golden week holiday in China from October 1st to 6th, and so a lot can be expected before that, and maybe we don't know, the 6 days break can give the Chinese government more time to come out with some measures. So we keep looking at what China is doing definitely. Now, in the meantime, a lot of focus on the dollar, which has been on a bearish move for nearly 3 months now. But it's stalling above crucial support at 100. To know whether this trend continues with a deeper fall or it stalls or consolidates, we have to wait for more evidence on two things. One is inflation. Recently, Powell and other members have expressed a greater confidence in inflation hitting 2% target sustainably, and hence do not feel the need to keep rates as restrictive as it has been. Friday's PCE core inflation will be the first closest look that we will have to see whether the confidence is justified. Consensus expectations show headline easing on both month-on-month and year-on-year basis, while the core year-on-year is seen rising. Now, data will also show light on personal spending, which is seen dropping. Now, the other focus is on growth, whether growth is slowing as much as to justify the hefty rate cuts that has been discounted with the market and even shown in the dot plot. We will have clues from GDP data today, which is forecast to rise to 3% from 1.4% in Q1. But that can be considered as a backward looking. Hence, the next week's employment report will give us a better assessment. Now, employment is a forward-looking indicator which will eventually determine the consumption level. And as we know, the consumption forms two-thirds of the US GDP. But in my view, the biggest risk to dollar short position and even the risk position is the inflation, which in which I consider two factors. One is having cut heftily 0.5% already, and if they do similar in November, they may well be soaking inflation once again, which is the risk to the markets. Also, according to some studies, the financial conditions in the US had already eased over the course of this year, and it was at its lowest level since May 2022 on the day Fed decision was made to cut 0.5%. So, what is likely in the coming days on the inflation front, if not this month's data, next month's data should be very closely watched. Also, one more new factor that has arisen is the proposed port workers strike in eastern coast of US involving 45,000 workers that can jam supply chains and reignite inflation ahead of the US presidential election. So I think that's one of the reasons why we see the dollar stalling above the 100 mark. And even yesterday, there was an attempt to break down. Euro went above 1.12 as well, but then quickly retreated to 1.1130, and dollar index is also above 100.50. Really, market wants to see more confirmation before they can take on those supports to break. And of course, we also have important events in the other regions, like Tokyo region inflation data will be announced tomorrow, which can be leading indicator for the country's inflation. BOJ's July minutes showed that most of the members were hawkish. They don't want to delay the rate hikes too much. So I think this inflation number from BOJ from Japan will be important. We also have the flash inflation numbers from France, Spain, and Germany starting tomorrow, which will give an indication on ECB's next move. But many analysts are now calling for ECB to cut every meeting from October onwards till March. So almost they may be matching what the Fed does, and which means the euro's support is not so strong, at least from the yield point of view. Now, come to our own rupee. There is a perceptible change in the RBI's approach, at least in terms of the volatility. We don't have those days of very tight ranges of 2 paisa, 3 paisa. We are seeing some expression in the market of its view, but not really as it was before. But definitely much better than what we were seeing in the last several months. Yes, the flows have been the biggest factor in this because we have seen almost 10 billion flows in this month alone, and with still a few more days to go. And this is matching the highest flow that we have seen in December 2023. No wonder that RBI had along with the dollar index weakness being seen, the rupee was allowed to move to some extent. Again, how far we move down is definitely not going to be based on some views. It's always going to be based on flows. It's always going to be based on how the global markets are moving. So don't expect big moves in the dollar rupee, either to the downside or to the upside. Upside is anyway capped by RBI. Even the downside moves depend whether the global dollar continues to fall and whether we continue to get the flows. So that's the state we are in. A lot to look forward to. And don't forget that we have another central bank which is going to ease today. That is the Swiss National Bank, going to ease by 0.25% for for the third time. And yes, a busy week in the next 2 days. Thank you.
Thank you, JK. And just quickly summarizing new measures by China being announced. And there are even rumors now that China will run a higher fiscal deficit to boost growth. Dollar, which has been on a bearish move for 3 months now, is finding support at its lower end of the range. Markets are awaiting the inflation data as well as looking closely at the employment and growth numbers. Now, dollar shorts may be at risk if Fed cuts another 50 basis points, which may trigger inflationary risk. So I think, as JK mentioned, markets are looking at more cues before confidently that the dollar moves any lower very significantly. Uh, and when it comes to data, Japanese inflation number will be out tomorrow. It is important to determine the BOJ's rate path. And of course, we have the PCE numbers. The headline numbers are expected to ease, while the core numbers may rise year on year. For rupee, there is as JK mentioned, there's a change in RBI's approach when it comes to volatility. Days of tight ranges of 2-3 paisa has been replaced by a good amount of moves, good for the markets. And of course, global cues and flows will be driving the USD INR pair. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.